Hi everyone, welcome back. Nice cold Friday. It's 10:53 on the 25th of January 2019. What I have done, guys, we're going to go in a bit more aggressive today. We're going to gap it over the weekend as well. We're only £26 drawn down. You can see that I've actually took a trade on the pound US dollar at 50 pence, which is double and a bit what we normally go in at. So the reason is I can see that we've got a nice durational trade of 3 candles and we've got indecision. What I've actually done, I've marked up these lines, obviously the top of this swing, and you can see we've got a nice bit of obviously what is support coming down here where it's tested the swing as resistance. So what I'm going to do, I'm going to really use this area of price as a area of support and indecision. So you can see as the markets come down, we've had a nice doji candle representing indecision, and this candle's really struggling to make lower lows. So what I do think is going to happen, I think we're going to have a real bearish move trying to break to the south side of this support zone, and then it releasing obviously buying pressure back into the market, because obviously as it goes down, obviously the pound US dollar is becoming a more optimum price for bigger institutions to start buying at. So I've actually got in early. I wanted to put a pounder pip on this because we've got quite a lot of spare and we've still got over 20% profit. So I was going to go in very, very aggressive. But what I'm going to do, I'm going to scale in the first trade at 50 just in case it does release early. And I'm going to scale back with the 20p's, keeping the risk relatively low. So I'm aiming to try to make at least about £10 on this tiny little account with this trade. I'm going to apologise. It is boring when you trade in really, really small amounts. But the idea of once we can get this up to £1,000, £2,000, £3,000 account, I will show you within probably 6 months to a year how you can, once you've actually got the process going, how you can start drawing a wage out of your trading account. And it's like any other business. Businesses usually don't make money for the first 3 years. If you've got a business that's lasted longer than 3 years, you're probably making good money. So it's pretty self-explanatory, so I can talk then. So like you can see, it's the buying pressure that's trying to release, and what that is people taking dollars out of the market due to what the current price is. Also, another bit of analysis. Every single day this week, we've tends to have a nice sort of trending market where the market's pushing up and up and up and up. And you get a lot of traders that go, right, I'm going to stick a nice trend line on that and we're going to try and go bullish. But obviously, I don't tend to use trend lines because trend lines can be broken. Doesn't mean that they're wrong. Okay, it's just an indicator that I don't personally like using. But what I do know is due to the mechanics of the market, averagely, because of the way price fluctuates with cyclicity, on a Wednesday, Thursday, you usually get a nice big turnaround, at least 25% of the early week's move. So Monday to Wednesday, 25% move. Then you have obviously a 50% retrace of that. Obviously, this week we haven't had the retrace. So this is also another indicator telling me that we may have another bullish push up into next week. We have got some major news coming out Tuesday, and with the Brexit, and honestly, I think we're going to be trying to push up the price artificially to try and accommodate any bearish move to the downside. So when it's not costing the UK and the government so much money if it does go wrong. That's only my bit of analysis. But what I will do, guys, I will update you and have a great weekend.